As it relates to stocks and bonds, you might hear the terms primary market and secondary market. So what's the difference between these two terms? This can go for any type of financial security. Here I'm going to focus on stocks. A primary market for stocks refers to the company selling or issuing shares to investors. The proceeds of that transaction goes into the company. Those proceeds can be invested in assets or can be used to fund operating expenses if it's a new company. The key point to remember is that the company is a party in the transaction. In the secondary market, in contrast, stocks are bought and sold by investors and speculators. The company is not a party to the transaction and therefore does not receive the proceeds of the sale. These transactions can occur as private transactions between a buyer and seller, or they can occur through a stock exchange. If you want to learn more, you can visit our website at fundamentalinvestinginstitute.com, where we have additional educational resources.